Taxation, Part 1, Value-Added Tax. What are the two types of output vatable transactions? Those sale, barter, or exchange subject to 12%, that sale, barter, or exchange subject to 0% or zero rate. Kind of transaction, taxable transactions, sales or leases taxed at 12%. Tax consequence, seller is subject to VAT at 12%. Seller is entitled to input tax credit. Seller pays excess of output tax over input tax to BIR. Sale or leases tax at 0%. Seller is subject to VAT at 0%. Seller is entitled to input tax credit, and seller can claim refund or tax credit to input tax on zero-rated sales. What are 12% vatable transactions? Sale of goods. Sale of real properties primarily held for sale. Sale of right or privilege to use, patent, copyright, design or model, plan, secret formula or process, goodwill, trademark, trade brand, or other like property or right. The right or privilege to use the Philippines of an industrial, commercial, or scientific equipment. The right or privilege to use motion picture films, tapes, and discs. Radio, television, satellite transmission, and cable transmission time. Sale of services means the performance of all kinds of service in the Philippines for a fee, remuneration, or consideration, whether in kind or in cash. Importation of goods. VAT is imposed on goods brought into the Philippines, whether for use in business or not. The tax should be based on the total value used by the BOC in determining tariff and customs duties, plus customs duties, excise tax, if any, and other charges such as postage, commission, and similar charges prior to the release of the goods from customs custody. Deemed sale transactions. Transfer, use, consumption not in the course of business of goods originally intended for sale. Distribution to shareholders as share in profits. Distribution to creditors as payment of debt. Consignment of goods if actual sale not made within 60 days. Retirement or cessation of business with respect to ending inventories. What is zero-rated transaction? Sale of goods, foreign currency denominal sale, export sale, sale of person and entities which is VAT exempt under special laws or international agreements to which the Philippines is a signatory, sale of power of fuel generated through renewable sources of energy, sale of services, processing, manufacturing, or repacking of goods for other persons doing business outside the Philippines, which goods are subsequently exported, where the service are paid for an acceptable foreign currency and accounted for in accordance with the rules and regulation of BSP. Service rendered to persons covered by special laws. Services rendered to persons engaged in international shipping or airport operation. Service performed by subcontractors or contractors in processing, converting, or manufacturing goods for an enterprise whose export sales exceed 70% of the total annual production. Transport of passengers and cargo by domestic air or sea carriers from Philippines to a foreign country. What is foreign currency denominated sale? Means a sale to non-resident of goods assembled or manufactured in the Philippines for delivery to a resident in the Philippines paid in an acceptable foreign currency and accounted for in accordance with rules and regulations of the BSP. What is export sale? The sale in an actual shipment of goods from Philippines to foreign country paid for in an acceptable foreign currency and accounted for by the BSP. The sale of raw materials or packaging materials to non-resident citizen buyer for delivery to resident local export-oriented enterprise paid for in acceptable foreign currency and accounted for by BSP. Sale of raw materials or packaging materials for an export-oriented enterprise whose export sales exceed 70% of total production. Sale of gold to BSP. Those export sale under the Omnibus Investment Code. Sale of goods, supplies, equipment, and fuel to persons engaged in international shipping or international air transport operation. What is a sale under special law? Sales of goods or properties to persons or entities who were tax exempt under special laws or international agreements to which the Philippines is a signatory, such as Asian Development Bank, International Rice Institute, PEZA, CDA, SBB, MA, shall be effectively subject to zero-rated. What is effective zero-rated based transaction? Refers to the local sale of service by a VAT-registered person to a person or entity who was granted indirect tax exemption under the special laws or international agreement. Sale to Asian Development Bank, Sale to International Rice Research Institute. Sale to duly registered and accredited enterprises with Subic Bay Metropolitan Authority. Sale to duly registered and accredited enterprise with Clark Development Authority. Sale to duly registered and accredited enterprise with Philippine Economic Zone Authority. What input taxes may be credited? Purchase evidenced by VAT invoice from VAT registered suppliers, VAT paid in course of trade or business on the purchase of important goods, for sale, for conversion into or intended to form part of finished goods, for supplies, for purchases of capital goods for which deductions from depreciation is allowed. VAT paid on purchase or real property. See below. VAT paid on the purchase of services, transactions deemed sale, purchase, transition input VAT, presumptive input VAT. Note, allowable input tax on depreciable goods. Capital goods, if the value of the capital goods purchase exceeds 1 million, the input shall be spread out over 60 months if the life of the property is equivalent to 5 years or more. However, if the life of the capital goods is less than 5 years, then input shall be spread over the life of the property. If the value of capital goods purchased is less than 1 million, the total input may be allowed as credit in the time of acquisition. How to treat input VAT from zero-rated transactions. The input tax on zero-rated sales of goods or property or services may, at the option of the VAT registered person, be refunded. 2-year preemptory period applies, or converted into tax credit certificates which may be used in paying other NIRC taxes. 2-year preemptory period applies, or carried over to the next quarter. Unused input taxes of persons whose registrations have been cancelled due to retirement from or cessation of business may be converted into tax credit certificates, which may be used in payment of other NIRC taxes. 2-year preemptory period applies. How to claim refund or avail of tax warrants. A refund or conversion of tax credit certificate must be availed of by the VAT registered person within 2 years from the purchase and shall be granted within 120 days from the date of submission of complete documents. Refund shall be made upon warrants drawn by the Commissioner of Internal Revenue or by its authorized representative without the necessity of being countersigned by the COA chairman. In case of CIR denies the refund, the remedy is to appeal within 30 days to the Court of Appeals. In case of inaction of Commissioner of Internal Revenue within 120 days, appeal to CTA within 30 days after the lapse of the decision period. What is input VAT allocation? When a taxpayer with a VAT business and non-VAT business makes a purchase during a month for a VAT registered person for use in his VAT and non-VAT business, the input tax on the purchase shall be allocated between the VAT and non-VAT business on the basis of sales during the taxable month pro rata. Purchase transactions, ordinary 12% VAT purchases, treatment creditable. Purchase transactions, zero-rated purchases, treatment creditable or convertible or refundable. Purchase transactions, exempt purchases, treatment cost or expense. What is a transitional input VAT? When a taxpayer who is not subject to VAT becomes subject to the VAT due to gross sales of preceding year exceeded that 1,500,000 or the taxpayer being exempt from VAT system opted to be registered under the VAT system shall be allowed an input on his inventory in a transition date of goods or properties, materials and supplies equivalent to 2% of the inventory value of the VAT actually paid on it, whichever is higher. What is the presumptive input VAT? Persons or firms engaged in processing sardines, packed noodles, mackerel, milk, refined sugar, and cooking oil shall be allowed presumptive input VAT equivalent to 4% of the gross value in money of their purchases or primary agricultural products which are used as inputs to their production. The team processing shall mean pasteurization, canning, and activities which through physical or chemical process alter the exterior texture or form of inner substance of a product in such a manner as to prepare it for special use to which it could not have been put in its original form or condition. What is the withholding of creditable input VAT? The government or any of its political subdivision, instrumentalities, or agencies include government-owned or controlled corporations shall, before making payment on its purchase of goods or services from seller subject to the VAT, deduct and withhold the VAT at the rate of 5% of the gross payments, which shall be creditable against the VAT liability of the sellers. What are the VAT exempt transactions? Sale or importation of agricultural and marine food products in the original state, even if they have undergone a simple process of preparation of or preservation for the market, such as freezing, drying, salting, boiling, roasting, smoking, or stripping. Sale of importation of fertilizers, ordinary feeds, seeds, seedlings, and fingerlings. Importations of personal and household effects belonging to resident of the Philippines returning abroad and non-resident coming to resettle in the Philippines. Importations of professional instrument and implements, wearing apparel, domestic animals, and personal household effects. Services subject to other percentage taxes. Services of agricultural contract growers and milling for other of palay into rice, corn into grits, and sugar cane to raw sugar. Medical, dental, veterinary services except those rendered by professionals. Educational services rendered by private education institution duly accredited by DepEd, CHED, and TEFDA. Services rendered pursuant to employee-employer relationship. Services rendered by regional or area headquarters established in the Philippines by multinational corporation which act as supervisory, communication, and coordinating centers. Sale by agricultural cooperatives duly registered with Cooperative Development Authority. Gross receipts from lending cooperatives. Sale of non-agricultural, non-electrical, and non-credit cooperatives duly registered with the CDA. Export sale of non-VAT registered individuals. Sale of residential lot 1.5 million and below and other residential dwelling valued at 2 million and below. Lease of residential units with monthly rental not exceeding 10,000. Sale, importation, printing, or publication of books in any newspaper, magazines, review, or bulletin which is appear regular intervals with fixed prices for subscription and sales and which is not devoted principally for paid advertisement. Sale or importation of passengers or cargo vessels and aircrafts for domestic or international operations. Importations of fuel, goods, and supplies by person engaged in international shipping or air transportation. Services or non-bank financial intermediaries. Sale or lease of goods or properties or performance of service other than the transactions mentioned in the preceding paragraph. The gross annual sales or receipt do not exceed the amount of 1,500,000. Exempt from transaction. Seller is exempt from VAT. Seller cannot separately bill output tax to the customers. Seller is not entitled to input tax credit. Seller shall be liable to VAT if he issues VAT invoice or receipt and without the benefit of input tax credit. What is the effect of the transfer of goods by tax-exempt person? When a person who was exempt from VAT on his importation subsequently sells, transfers, or exchange in the Philippines such imported article to a non-exempt person or entity, the purchaser, transferee, or assignee shall be required to pay